Hi, everyone, and welcome to another installment of Going Elliptic, where we're talking with just some of the most interesting people across crypto and DeFi. And today, we really hope there'll be some more interesting and educational content for you. We do have to say this is not investment advice, and very much we hope that you learn something and take something away. So thanks for joining. And today is also an installment of Protocol, which is where instead of talking with, say, just traders or fund managers, we get more into the engine room with people who are actually coming at this from a data science or protocol engineering perspective. So hopefully a really good deep dive for all of you out there. Hey, Shanky.
Hey, Paul, how are you doing?
Yeah, pretty good. Obviously, a lot of people are converging in Paris at the moment for the Ethereum conference there. Sad not being there and kind of missing out, but still interesting to see all of the discussions and what happens when you get that many smart people in a room.
That's true. Yeah. A lot of conferences have been different in general over the last few months. So it's interesting to see how this one pans out.
For sure. Great. So, yeah, what else, what other content have we been working on recently? Obviously, we had a pretty cool conversation last week with Maddie Sino and from Sino Global Capital. Is there going to be a newsletter coming out this week, do you reckon?
Yeah, I think so. So there are a couple of things that for listeners just to keep in mind. We've been bringing on a number of excellent guests. And when I say excellent guests, these are really people on the ground doing excellent stuff in the blockchain crypto space. People really moving mountains, doing new things, exploring lots of newer areas. And we saw that with Matty Sino and, his perspective on, how you could get crypto going in China, and today, in fact, we have another fantastic guest today who has, an amazing view from data science, from on-chain analytics, from just a deep world of both protocol as well as all the crypto economics. So we're certainly looking forward to that. I think that's another interesting one. We have intentionally not covered the markets as much. We were doing a lot of our market coverage and we've kind of stayed away a little bit. To be very blatantly truthful and upfront, I think the markets hasn't really shown much excitement either. It's just been range bound as we had predicted. It's hanging around those levels very sideways, and so I think purely from an investor standpoint, there isn't necessarily a lot more new data than there was a few weeks back. Now, having said that, I think this week we'll certainly come out with some. We do think that it might be priming towards an interesting explosive move. We're not saying the interesting explosive move might come this week, but I think the market's certainly priming for it. So we'll look at the markets. We'll try and understand it, and perhaps we'll try and bring on a chartered session, or we'll do some recordings on TradingView like we've done in the past, and we'll share that. And hopefully that's helpful. And certainly, I think we've got the newsletter going, as you mentioned. You've shared that link there, goingelliptic.substack.com. And we are likely to bring out the ETH-centric newsletter. I think, in my view, Paul, what do you think? It's also nicely timing up with, EIP 1559, and maybe the excitement in ETH is coming back. So maybe it's a good time to bring that back.
Yeah. Yep. No, I'd definitely like to see that, and maybe even some data from today's guest as well. Hoping there'll be some nice on-chain analytics that we might be able to share in that newsletter too. So why don't you tell us, who is today's guest?
Absolutely. Yeah. So we've got an excellent guest today. We've got Alex, and I don't want to butcher his last name. I think it's Svanevik. But, Alex is an excellent guy in the crypto Twitter sphere. He comes with a background of data science. He built out this fantastic company called Nansen AI. And he's really been the thought leader in the on-chain analytics, on-chain crypto sphere, right? In fact, the way I think of Alex is he's like Willy Woo plus. Willy Woo started out by looking at on-chain data for Bitcoin, and Alex has come in and taken it to the next notch, the next level. So yeah, it's very excited to have him in our show. Let's bring him on. Let's talk to him.
Hey, Alex.
Hello. How's it going?
Doing well, Alex. How are you doing?
Yeah, doing well. It's a nice Monday morning here in Singapore.
Excellent. Yeah. So, I was telling our listeners that I look at Alex as a Willy Woo plus plus. The first time I was looking at somebody looking at on-chain analytics and trying to make sense of it, it was Willy Woo, who became popular looking at the Bitcoin chain. And I just feel like you have upped the game there.
Right.
You came in with your data science and, deep analytics angle, and just what you're doing at Nansen and everything else is super exciting to us. So why don't you introduce yourself in your own words a little bit, and maybe kick it off by telling us, how did you get here? What got you to Nansen AI? What's the story?
Yeah. So first of all, I mean, it's nice to be able to stand on the shoulder of giants, right, and do incremental work on other people's work. So my background is in AI. I have a bit more than 10 years experience with that. And I started a company literally the same day that I handed in my master's thesis at the University of Edinburgh. And that company was a small AI consultancy. We did a lot of interesting projects, but this was before, deep learning was a thing and so on. So AI wasn't really top of mind to the extent that it is today. And so I wanted to learn a bit more about business in addition to the more technical education I had. So I went into management consulting for a few years, worked with everything from luxury retail to seafood and insurance and banking. And then I kind of went back to my roots in data science and AI, and I took a position as a data scientist in a European media group. And then ended up becoming a data science manager, leading a team there across Barcelona, London, and Oslo. And in 2017, I discovered Ethereum. And I pretty much, I really liked the idea of Ethereum. It resonated with me a bit more than Bitcoin had when I'd learned about that for the first time a few years before. And I think the time from I bought my first Ether to, jumping in and actually quitting my job and going full-time crypto was just a couple of months. So I had pretty high conviction relatively fast. And the first thing I did was I joined a crypto startup in Hong Kong. So I packed up my things and moved from Barcelona to Hong Kong. And the task at hand was to build out a data team for this startup. I was able to bring on 4 other people in my team. One of them was Evgeny, who's now my co-founder at Nansen. And unfortunately, that startup itself didn't work out very well. It was one of those ICO'd startups that had raised a lot of money, and then through a combination of poor treasury management and market conditions not being very good in 2018, the company basically had to shut down at the end of 2018. So, but that was kind of a blessing in disguise, because Evgeny and myself, and also Lars, our third co-founder, ended up creating Nansen in late 2019. And so in between there, I did a bit of consulting work with 0x, for example, a decentralized exchange protocol. Mm-hmm. Also did a project with Aragon, which is a DAO platform. And so 2019, we started Nansen. About 6 months later, we shipped the first version of the product. And it's been a wild journey since then. At this point, we're more than 30 people in the company. And we've raised a seed round and most recently a Series A round. So things are looking pretty good.
Fantastic. Well, congratulations. What a journey there.
Thank you.
How would you define Nansen? Maybe let me ask that, and then of course we'll have a lot more to talk about the details. But for those who do not know of Nansen, in your own words, what is it? What is the mission of Nansen? What it's trying to do?
Yeah, the mission of Nansen is to surface the signal and create winners in the future of finance. And so by that, what we mean is we really want the future of finance to become a reality. And the future of finance is kind of a meme term, but basically it refers to a blockchain-powered economy. That's kind of how I think about it. So we want the future of finance to become reality. But in order for that to happen, we strongly believe that the pioneers who enter this space, they have to succeed. So if you're a new user, if you're a new investor in the crypto space, you have to become a winner, because that's how you reinvest into the space. And that's also how you bring in other people from the outside. Right. They say, hey, look at, this person is actually, making a lot of money, or they have a much better user experience using DeFi than banking, and so on. And so that's going to bring in more people. And so what we try to do is to surface the signal in all of this noisy information that's in crypto, and to try to make sense of the markets by providing high quality analytics on blockchain data. So the raw information you get from blockchains, but then we enrich it with data on more than 90 million different addresses. And so you can think of it as in those 3 steps. So, we help to surface the signal that helps these pioneers emerge as winners. And then as they emerge as winners, the whole space of decentralized finance grows because it has more access to capital, and builders can build wonderful things. So that's kind of what we do. In short terms, we're a blockchain analytics platform, but in terms of a mission, that is more what we're trying to accomplish in the bigger picture.
Fantastic, love that.
Yeah, that's very cool. And I know you'd had that kind of bad experience being in an ICO'd startup, but you haven't tokenized Nansen, right? So you're at this kind of weird juxtaposition of still being VC funded, but kind of actually there trying to help a lot of projects that perhaps are more tokenized to win. How do you balance that?
Yeah, I mean, I do think some of it is probably colored by my experience of, the first company I worked at was an ICO startup, and I saw how they struggled trying to build a product, but at the same time keeping token holders happy. So the philosophy here is that if you have a token, then you have to innovate in 2 dimensions at once. You have to both create a world-class product, like any startup aims to do, but you also have to build in token utility that makes it, worthwhile being a holder of that token. And it's already difficult building a world-class product, right? And so if you add the token to it, the complexity just increases square. So I think what we've thought is, let's focus 100% on the product, and let's not worry too much about tokenization, and instead simply raise funds through equity emissions, because that's a very well-known form of providing ownership to people. Now, if we had the chance to sort of let anyone invest in Nansen as a company through like tokenized equity or something like that, I think we definitely would. But of course, the regulatory environment doesn't really allow for that. So we've kind of had to take the more traditional path of the VC-funded startup. But the plus side is that we have a lot of flexibility when it comes to our focus as a company. We can pivot more easily if needed over these years, because crypto is an industry that changes all the time. And so it's really challenging if you want to ossify your product, but then the market conditions change. And so the thinking has been that this is the most flexible way that we can build a company and we can grow it successfully.
Yeah, very cool. And that's true. I think you make a good point that you want to reduce complexity. One is already too many, right? Getting the product right, getting a product market fit is a humongous challenge. So, there is no need to add to that complexity. So it kind of makes sense.
I mean, the way I think about it is, if you have a clear token model and your product is more or less ossified, you know that your product isn't going to change, then you probably should tokenize, right? That's not legal advice or anything like that.
Right.
But that's how I think about it. In the case of Nansen, it's kind of like a complex product. It doesn't only do one thing. And it's also not trivial how you can tokenize information in a meaningful way. There are some examples of people who've tried to do it, but I wouldn't say any of them have been, massive successes. So we're kind of taking a wait and see approach when it comes to tokenization. I definitely, I'd love if we could find a way to tokenize Nansen and decentralize the ownership of it. And I don't want to go down the path of, although Coinbase is a great company, but to go public when you're already at $100 billion valuation isn't really what we want to do. So hopefully there will be some kind of in-between solution between like something that ICOs before it even has a product versus the kind of very late stage going public at $100 billion.
Very good. Yeah. So I want to shift gears a little bit and ask you a couple of things. We all have been through a massive bull run. And in fact, everyone's still trying to figure out whether the bull run is over or not. So that's a different story. But what I want to ask you, as somebody who's deep in data science and looking at analytics, there's one thing to look at price and say, hey, the price went 6x and now it's 50%, retraced and so on and so forth. But tell me, in the eyes of, on-chain analytics, what are the key learnings from the last 6 to 10 months? What has happened that didn't happen before, or, just from an analytics standpoint, what is the big takeaway?
Yeah, so I think a few takeaways. The first one is probably that you actually have organic activity on blockchains that reflect product market fit. And so DeFi is probably the shining example, right? DeFi projects are actually being used because they are great products in many cases. And so that's one massive change if you compare to, say, 2017, 2018, when sort of the primary use case of blockchains was to just send funds between exchanges. And now you actually see people that lock up capital to get yields on that capital, right? They can borrow money, they can do leverage trading, like all these things on the blockchain itself. And so I think that is one massive difference, and it also means that the blockchain activity is much more interesting to study. You practically, you had some decentralized exchanges. Back in 2017, you had things like Ether Delta, IDEX as well, which are still around. But now, of course, DEXs are much more dominant than they were before. So that is one major shift. I would also say the other theme is that we have gotten sort of different subcultures or sub-markets within crypto. So the NFT market, for example, is to a large extent, I would say uncorrelated 100%, but even in this downturn in the last few months, if you look at something like Bored Apes Yacht Club, that's just been pumping, and they're getting more and more interest, every day. And so I think you see, this is fascinating because number one, the blockchain activity looks very different, like there are different applications, right? And number two, you also see different types of people engaging with different types of applications on the blockchain. So there are actually people who are only into NFTs, right? They don't care about DeFi, they don't care about dog tokens on Uniswap or whatever it is. They only care about NFTs, and that's their thing. And then of course you have lots of people who are really into DeFi, but they don't really get NFTs. They don't care about NFTs, and they think it's silly, it's just JPEGs or whatever. And so I think those are probably the two main trends that DeFi has emerged as the prime example of product market fit for blockchains, and then you have actually different types of applications, like NFTs being the next one. So yeah, those are some of the things that we see day to day. We see new NFT projects popping up. We see capital flowing into those projects. Flipping them, and in some cases holding them for the long term. And then maybe I would add a third point, and that's stable coins. So the stable coin scene is much healthier now than it was, I think, back in 2017. You have much more options and different types of stable coins you want to use. You have lots of crazy experiments with algo stable coins and so on. But that's perhaps another good example of product market fit for blockchains.
Excellent. Yeah, that's great. And also, I mentioned the lead time between a new form of on-chain activity kind of starting to pick up pace and when it actually turns into an insight, and then from that insight when it actually becomes kind of more broadly known across the crypto sphere. Is that shortening?
That's a good question.
I guess one of the things,
yeah,
when we look back to, say, before the DeFi summer in 2019, things like the front-running bots or the first MEV kind of automations, I'd say there was probably a good month at least before it had kind of people had worked out what was going on with those types of transactions.
Right.
And then another few months before users really learn, okay, reduce slippage in these scenarios or do these things to try to mitigate it, right? And so I feel like as we're getting more data, surely we should be able to see or spot these things sooner. Perhaps more data is more noise. So yeah, how do you see it?
Yeah, no, it's an excellent point. I think it is true that people are able to spot things sooner now, precisely for those reasons, right? There's more information available. But the counterpoint is that the complexity is always increasing as well. And so something like MEV is, it takes a lot of learning. If you're a new person joining crypto, it takes a lot of learning to get to understanding MEV fully. So I think that's definitely a challenge. And then the other part is that the sort of competency level of people who are in the space has matured dramatically, and of course people are sharing information with each other and so on. So it's hard to say. I like to think like to compare things with the bull run, for example, in 2017. And back then, primarily, it was social media metrics that people were looking at. Mm-hmm. So it was, Telegram information, ICO influencers who were shilling different projects. What are the fastest growing Telegram groups? Now, I think there's still a bit of that, of course, but I do think that on-chain activity has become much more important for many people. I'm obviously biased running an on-chain analytics company, but I do think, just looking on Twitter and so on, I think people watch the blockchain itself much more carefully now than they did before. And frankly, if you go back to 2017, like normal traders didn't really have access to very high quality, granular on-chain data. Because back then, the primary sort of on-chain analytics providers were companies like Chainalysis, who focus on law enforcement, tax authorities, and so on. And their subscriptions, were not accessible to ordinary traders or even small crypto funds, right? Because the pricing was pretty extreme. So now, that's possible. You can actually get annotated, high quality on-chain analytics, even if you're a retail investor, given that, of course, your crypto portfolio is large enough to justify it, typically, in hundreds of thousands of dollars or so. But yeah, so I think that's a big difference. And it is true that you can spot some of these trends a lot faster. But you have to, I guess you can distinguish between, trends in the form of individual projects, which you can spot very fast now, right? Like if there's a new NFT project, sure, there's a good chance that someone gets an alert in, through their either smart alerts in Nansen or some other alerting software, where within minutes or even seconds you can get that notification. But if you're talking about longer term trends, things like MEV or just general, how NFT sales are created and so on, of course that requires a bit more of analysis and so on. But the foundation is a lot better now than it was a few years ago to make those analysis and understand things quickly.
So Alex, just adding to that, certainly looks like people are able to get hold of newer opportunities faster, right? Like that's what I kind of take away from this, or able to understand the markets a little sooner. Is there also scope to then perhaps have better risk management or better hedging opportunities with all this intelligence that is coming through? Like would it be possible where we can figure out, hey, this looks scammy, or this isn't going in the right direction, or this is like over leveraged, or things like those, especially just from on-chain activity. Do you guys have that on your radar? Are you guys working in something like that?
So there are maybe two ways to look at that. The first one is what we do today, and many of our users do, is to see who are the other participants in a specific opportunity. Mm-hmm. So if there's a yield farming opportunity out there, you want to figure out, well, who else is providing capital? Mm-hmm. And so that's the classic use case of Nansen. It's one of the first things that people used it for during DeFi summer. They were saying, hey, there's this new project that's popping up. It's a fork of something. Who's actually putting money into this? Because this is analogous to, say, VC funding, right? If there's a big VC leading around, a lot of people want to follow, right? They want to follow and invest. And so it's similar here. If you see big names that typically know what they're doing, that can give you information for whether or not you should also jump on that opportunity. So that's a form of risk management, right? If you don't see any smart money addresses in a specific opportunity, then maybe you want to sit this one out, or you at least want to spend more time investigating it. But if you see, all the big names are, in this pool, then, it's a good chance that the risk might be low compared to how high the rewards are. And so the other way to look at this is to maybe take a step back and think about one of the key benefits of DeFi, and that's transparency. Mm-hmm. So in the traditional financial markets, of course, with the great financial crisis and so on, a lot of what was going on was, I wouldn't say it was obfuscated, but it was certainly difficult to understand how all these different things fit together. And in DeFi, everything is transparent by default. And so that, of course, this is in principle, right? You have to do a lot of data processing to make sure that you can actually, understand what's going on. But at least in principle, you can do that. And a company like Nansen, of course, we're always trying to figure out what are the best ways that we can show macro stats, right? Like where are all, for example, if you're trying to understand the risks surrounding DAI, right? Like what's the composition of collateral in it? Where's the DAI sitting? Like if at some point there's a massive risk going on, are we going to be able to, withdraw the DAI from like the various different places that it's parked? Right. That information you can get today looking through Nansen. But the general principle of transparency, I think, is something that makes DeFi much better suited to do, not just complex financial transactions, but also do them at a very large scale, because you can actually understand the risks much better than in traditional finance, where a lot of the information is behind closed walls.
Right. Oh, certainly. Yeah. I think the just the broader sort of availability of data is in fact a great start. And then of course, what you're building is adding an additional layer on top of it. Then it becomes easy to consume, easy to understand. So very cool.
Yeah. And how do you, kind of decide what new chains, or, there's another layer 2 each week at the moment. It's like, how much data can you reasonably pull in and still make sense of and bring back to that kind of single entity? So if you've got something that's classified as being A16Z or placeholder VC, how do you know when they're popping up on a Polygon or another layer 2, especially some of the zero knowledge layer 2s?
Yeah, so I guess those are maybe two separate questions. So the first one, like, how do we prioritize different chains and layer 2s to integrate? So we have basically an evaluation framework where we take a pretty cautious approach when it comes to integrating other chains, because I think you have a massive risk as a data analytics company to try to support all the different blockchains, because the maintenance that comes with it, especially if you're trying to do attribution or wallet labeling like we do, the added cost of maintenance is very high. So we've been pretty cautious, but at the same time, we don't want only Ethereum L1 to be, what we support. So we've prioritized the EVM chains and sort of the chains and layer 2s that we consider to be in the broader Ethereum ecosystem. So Polygon is the first chain that we've added support for. Of course, there are many other factors that we look at. So things like, does it have actual organic usage, right? Or does it just have a lot of capital backing? That's, is it a classic ghost, like VC-backed ghost chain, right? To use that term. So we try to look for organic activity. And Polygon was like the classic example of that, right? A lot of people were moving to Polygon, tons of transactions happening there. A lot of the yield farming opportunities started appearing on Polygon. NFT platforms and NFT projects started popping up there. So it was like the classic example. And then the next ones that we sort of knew we had to support were Optimism, Arbitrum, where you see a lot of the kind of known DeFi projects already signaling that they're going to start putting out their own smart contracts and deploying there. But then there are other things like Solana, for example, which is very different technologically, and it also would entail ingesting something like 100 gigabytes worth of data every single day. just to keep up with the chain today. So it's a very different type of beast. So that's how we think in terms of the chains. We take a cautious approach, and we try to listen, of course, to what our users want, where there's organic activity, but also consider the integration costs, which is lower with EVM chains because they're similar to what we already have technology for. Now, with regards to how you track these different funds across the different chains, for example, one good thing about this EVM first approach is that you often have the same wallets. So if you use a bridge, you would actually bring your same wallet, and that gives us kind of a way to solve the cold start problem of a new layer 2 or a chain. So it means that we might already have millions of wallets labeled, or at least hundreds of thousands, depending on the activity on that chain. And then we can start using that information to label more wallets, because the network effect of wallet labeling is very high. So if you have 3 wallets, A, B, and C, and you know who A and B are, or at least you have some kind of label for them, and they interact with C, sometimes you can make an inference on what C should be labeled as well. And so we can leverage these network effects because there's a lot of reuse of wallets across the different EVM chains, like Polygon, Optimism, and Arbitrum, for example. And with regards to funds or large investors, you mentioned A16Z or Placeholder and so on. Many of these are active in governance, so they kind of have to be public to some extent in proposals or votes. Of course, sometimes they can find ways to hide it, but you can also make inferences in many cases on who they are. You can also do that from press releases on investment rounds if they led a round, or they were the largest investor, and you can see tokens being distributed. Of course, you can make the inferences based on that as well. So we try to take kind of an aggregator approach to this, where we both look at things from a manual sort of analytical perspective, but we also have to build out algorithms to detect wallets that we should be looking into, and in many cases classify them automatically. So more than 99% of our wallet labels are actually generated algorithmically.
Excellent. And where is most action today out of all these new actions? So you've been tagging everything other than Ethereum. Is it Polygon? Is there most of the new actions coming, or is it somewhere else?
Yeah, we actually have a public dashboard, which you don't need to have a Nansen account for Polygon. You can find it at pro.nansen.ai/Polygon.
Okay.
And there you can see, daily active addresses for Polygon. Generally, it's still going up. It's not as high as Ethereum, obviously, but I think it's been around 500,000 addresses that are active on Polygon. And you can also see different projects that are being used, right? So projects like QuickSwap, which is basically sort of a Uniswap fork on Polygon. But you also see SushiSwap, for example, which have taken this very expansive approach to launching on lots of different chains and layer 2s. And then you see, lots of different smaller, sort of more transient, algo stable coins, yield farming projects, and so on Polygon. But so that's probably the main one that we've seen. BSC, Binance Smart Chain, had a lot of activity for a while, but it seems like some of that is moving over to Polygon in the last few months and weeks.
Okay, good to know. So if I caught the URL right, it's pro.nansen.ai/Polygon. And for
That's
BSC
right.
also, is there such a URL? Is there like a pro.nansen.ai/BSC or something to that tune?
It's coming, but it's not out yet. We're still working a bit on it. It turns out that managing nodes and ingesting data from BSC is actually pretty hard. So we've spent more time than we expected on this, but we hope to ship BSC support in August.
Okay, all right. Well, let me ask you another quick question, and then I know that there are other things that also you need to attend to, so we'll start converging. But one quick thing we are definitely keen to hear your opinion on is the EIP 1559, right? That's a big thing that everyone's talking about in the Ethereum world, right? And it supposedly is going to have a lot of impact across board, right? From of course, the gas and the gas structures around it, but also Ethereum price and usability and everything else. What's your take on it in sort of very quick few words, what do you think of EIP 1559? Big deal? No big deal? What do you think?
I think it's certainly a big deal. I think from a trading perspective, I would definitely not want to be in any form of leveraged position around that time, because I would expect to see a high degree of volatility in the ETH price. And so again, not investment advice or anything like that, but I would definitely be cautious. I have no opinion, is the price going to go up or down? I do think that many people seem to have been, if I read 100 tweets about EIP 1559 on Twitter, 99 of them are bullish. And so that makes me a bit concerned, because I'm wondering to what extent people are pricing in the risks of it. Generally, I think it's an amazing change. I think maybe one thing to look out for is to what extent the products that build on top of Ethereum, like wallet providers, to what extent they will seamlessly or smoothly transition to EIP 1559, because the user experience will be a bit different. And then, of course, everyone will be expecting ETH to be burnt, right? So there's going to be a lot of eyes on those metrics, and it's really hard to say. I just it feels like it's definitely a massive thing. I would not understate the importance of it, and also perhaps the impact of it, both on the ETH price and also on all these projects that are building on top of Ethereum. So I would stay vigilant. But I'm generally positive, like most people, 99 people in my Twitter, out of 100 in my Twitter feed. But I'm also keeping a close eye on it, and I'm a little bit worried that all of us are very optimistic about it.
Fair enough.
Yeah. I think you're on the mark there in terms of it started out as a user experience improvement, and now most people are viewing it as this economic shift at the protocol level, and it's really is still somewhere between those two. It's not 100% one or the other, and so it's hard to say exactly how much impact it'll have. So definitely want to keep an eye on in August. Yeah.
So just Eric, it's co-created by Eric Connor and Vitalik, right? Eric is one of our angel investors, and so I have full faith in these two people, and their ability to write. At the same time, it's very hard to predict the outcomes of something that has, game theoretical implications, right? And there might be things we haven't thought about, right, or that they haven't thought about. So, yeah.
Great. All right. Well, we're coming towards the end of the show, but first we do want to run through a few rapid fire questions for you. Are you ready?
I'm ready.
Cool. If you had to choose one of these to trade, would it be NFTs, DeFi, or Bitcoin?
DeFi.
Cool. In one sentence, what's common between the 2017 and 2021 bull run?
Wow. I think what's common is that in both these bull runs, the markets are heavily impacted by influencers.
Good point.
Yep. Nice. And then, in your opinion, what's the single biggest use case for crypto?
DeFi.
Yep. And is there any educational resource or tool other than Nansen you'd recommend to somebody new entering into crypto?
I think someone who enters crypto might want to start with something like Bankless, because it's a pretty holistic way of looking at why crypto and DeFi is useful. And so Bankless is effectively a newsletter, but I think they do a lot of other types of content. They do a lot of good YouTube videos as well. So probably Bankless, I would recommend.
Nice. And lastly, complete the sentence, DeFi makes
the world a better place.
Excellent.
Excellent.
You like that.
Good stuff. Well, yeah, definitely appreciate everything you've shared there, Alex. A few bits of alpha definitely for the listeners there. And hopefully more people can find those insights from the data that you're bringing out and continue to expand on. So that's really exciting.
Yeah, thanks for having me on. And people are free to go and check out nonsen.ai, or even follow me on Twitter at @Svanevik.
Yeah, well, thank you so much. Thank you for joining us. We'll probably call you back. We have a bunch of other panels and other sessions where we love smart minds like yours, to come and participate and give, share your perspective. So thanks for coming this time, and we'll certainly have you again. Before you go, I'm going to ask you one last question as you're leaving the door. Is the bull run over, in your view?
It's actually impossible to say. I would say if you have a long enough time horizon, then it's not over. So I mean, just make sure that you're in this for the long term, and you'll be fine.
Fantastic. Okay, very good.
Great answer. Cool. Thanks, Alex.
Thanks very much.
Talk to you again sometime.
Yeah, thanks for having me. Happy to jump on whenever. Take care. Bye-bye.
Cheers.
Hey, cheers.
Cool. So yeah, that was good fun. Obviously, data. Keep talking about new oil or new electricity that drives the global economy, but even more so in the case of protocols and DeFi, right? So very interesting to talk to somebody who's not just at the pulse, but also trying to keep it ahead of the fire hose.
Totally. Yeah, I think so. And I think that this is what the kind of stuff that Alex is doing is really going to become the next big pieces of the puzzle, right? Where people will try to get into this second level of depth, start understanding the interactions, deduce from it, and then just make the whole ecosystem better. So it's really cool. Very good stuff.
Great. Well, yeah, if you enjoyed this show, we welcome you to follow us on either Twitter or YouTube, like, subscribe, and definitely come back for another session, another installment where, we talk to more people like Alex and across the board of crypto.
Absolutely. And also suggest, follow us on Going Elliptic and suggest if there are certain guests you'd like to see. If you'd like to see, do drop us a note and we'll do our best to bring them on.
Excellent. Well, we'll wrap up today's session there, but we hope to see you again next time. Thanks, Frankie.
Thank you, Paul. Bye for now.